Muneeb, are you on? Okay, great. Thank you. So welcome to the 8th KASB webinar. Over the last 2 months, we have arranged talks with experts from Shanghai, Beijing, UK, Seattle on various topics ranging from China to the impact on the economy to the views on investment. But this one is special. This talk today, we have Muneeb Ali, who is a co-founder and CEO of Blockstack, and he's joining us from New York. The reason why it's special is because Muneeb is, he's a global authority on this subject, and he's almost like a rock star in the crypto world, not just in the US, where of course crypto is a major theme, but from the US to Japan. So I'm really, really happy that Muneeb has given us time to talk to us and talk to our clients, because I know he's a difficult and hard man to get hold of. If you haven't checked his profile, which we shared, and if you haven't Googled him already, whatever kind of bio which I present might not do full justice. So I highly recommend you to check it before. But Blockstack has raised more than $75 million. It's the only SEC approved listing. They're trying to disrupt how internet is constructed by making distributed internet, so taking power away from the big companies, Google and Facebooks of the world, and redesigning internet. And some of the pioneers of internet, including the founders of the WWW, have credited Muneeb and what he's trying to do. Because it's such a special talk, I've got a special guest moderator for this talk. And Umar Suleiman is joining us from London. Umar runs a hedge fund which invests in cryptocurrencies. But prior to that, he has more than a decade of experience of investing in derivatives and complex instruments at some of the most leading investment banks in the world. He has been a managing director at SocGen, at Goldman Sachs, at Citigroup. And so he's one of the the gurus from the financial market world here in London. And recently he runs he started a hedge fund, and he's also trading cryptocurrency. So I thought it would be a good moment to ask him to step in and to moderate this discussion with Muneeb, because I thought it would be particularly interesting to get the tech world talk with the finance world. Because most people, when they talk about crypto, they think that it's something disruptive, something which is niche, particular to the Silicon Valley. But I thought it would be great to amalgamate the two. I'm conscious that this is a topic we might talk about Bitcoin and topics. So this is just a disclaimer that this is not. We're not recommending investing into any of these currencies, because in Pakistan, they might not be allowed. Of course, in the US and London, it's a different regulatory regime. And also, before I hand it over to Umar, I'm conscious that it's 9:30 in Pakistan, and people have gone on holidays for Eid. So this talk will be available on our website, which is ksb.blog. And people can sign up for research from KSB by downloading KTrade app. It's available both on Android and iOS. So if you download KTrade and register on it, you'll get access to KSB research. And if you go on ksb.blog, you can see this video recording of this talk, as well as the previous 7 talks which we have done. So with that, Umar, I pass the baton to you. Please hit Muneeb with difficult questions, and so that he can teach us and the audience about crypto world. So over to you, Umar.
Brilliant. Thank you very much, Ali. And welcome, Muneeb. It's an absolute pleasure to be moderated for the seminar, and also because Muneeb and Ali, but we go back a long way and know each other for an absolute long time since the undergraduate days. So we're really proud of what Muneeb has been doing in this space, and follow him, as Ali said, as an absolute authority in the space, in the cryptocurrency space. So I'll open the conversation, Muneeb, and for the uninitiated first. And the question is, what is a cryptocurrency? What is the link to the underlying technology? And in particular, why do we need these cryptocurrencies?
First of all, thanks so much for having me, and Thanks for the intro, Ali. I think it's humbling to be here, and especially with Umar. I think so. We went to the same undergrad. All three of us, Ali and I, were in the same batch as well. So we go way back. But with Umar, we actually went to the same high school as well. He was a couple of years senior to me, and partly actually my inspiration for going to my undergrad university. So it's great to be back here, and great to be able to talk about these subjects, which when I started. So this is just a little bit more background on me. I think like people know the work I've done in cryptocurrencies more, but at heart, I'm an engineer. I'm a computer scientist. I did my PhD in distributed systems at Princeton, and basically took a leave from the university to start the project that eventually became Blockstack. And that was like pretty early days in crypto. It was 2013. I think I bought my first Bitcoin when it was still like $90 or something like that, which sounds like an ancient time now. And over the years, I think I'm just like very grateful that the research work, or what we were trying to build, became an area that is getting more attention year after year or month over month, right? Because like I think we hit a nerve somehow with both the potential investors, but also users of these technologies, right? And the industry has grown a lot. To give you some reference point, again, going back to when Bitcoin was $90, the market cap of Bitcoin is now well worth of 100 billion, right? So you would see trades of Bitcoin now on active days, something like a single exchange like Binance would report $10 billion of trading volume, right? Just on a single exchange. So these things, like, they started off looking like toys, but they are no longer like that. And it's not just about cryptocurrencies, as Ali mentioned as well. Like, there's an entire world to be discovered. And I think that's my personal journey as well, that it felt a little bit like a rabbit hole, right? Like you it doesn't really matter which door you enter through, you will eventually discover everything else that is happening in this ecosystem, right? So let's start with the basics, the question that Umar had about what are these cryptocurrencies and why are they needed, right? So at the very heart of it, think of cryptocurrencies as something as simple as a digital representation of money, right? And it just happened that it started with Bitcoin, and then later on people are now creating something like stable coins. But I think from a mental models perspective, it might help to look at stable coins first, right? So a stable coin is a very simple thing. Basically, a company, let's say Tether, they would have some sort of a reserve of USD in their bank, and they would issue a digital token that's called USDT. And the value of that token is just $1, right? It always remains $1. And people can basically transact with that more easily than normal dollars. Like, imagine, like, we have some partners in Asia who would much rather have us send money as USDT because it would clear in within like 10-20 minutes. And it is like so much better from a UX perspective and ease of use perspective than sending a bank wire, right? So that's like the very basic, that it's a little bit like, how email is electronic mail and replaced traditional mail, like initially, and then start seeing more use cases. This is just digital money, right? So it's programmable digital money, and developers and other people can do more things with digital money than they can with normal kind of like paper money.
Brilliant. Thanks, Muneeb. So yeah, very nicely put in. Obviously, Bitcoin being an extension of that, then sort of invites some speculation. But leading into my next question, I wanted to sort of create this background of how the Bitcoin went, in particular since 2016 and 17, when it came into a real spotlight. And end of 17, we finally started seeing the biggest rally ever, and it hit the 20K mark. And then the 2018, while it was on those highs, obviously the hype was also very high. Lots of crypto related projects were built out. And then 2018 saw a complete sort of, as the Bitcoin price fell, the interest in the space also completely dwindled. and Bitcoin was either sort of completely ignored, or the naysayers were saying it's going to zero eventually. And so that was the second phase, I should say. The first where there was a huge hype, and second where all this doom and gloom, and then now it looks like we're in the third phase where lots of institutional guys are involved. And I know because of your fundraising, and then also a lot of your work, you deal with a lot of the institutional players in the space. So what's this third phase like, and where are we headed in the crypto, not necessarily in the cryptocurrency, but in the entire ecosystem?
Yeah, so I think that's a great question. So I think there's a talk by me. There was a small event at the Princeton Club in New York where I was talking about this exact same thing, and I was describing that this is a highly speculative, volatile market that tends to go in cycles, right? So there's a high followed by a crash, followed by a high. Again, doesn't like past behavior doesn't mean like the same thing is going to happen again. But what I was saying was this has happened at least 3 times before. So the probability that this will happen again is actually quite high. The catch here is that talk was in 2015, right? So if you go and see the Bitcoin chart, what looks like a flat line right now between 2000, let's call it 10 to 2015, was actually a same cyclic cycle that was happening, right? So the Bitcoin OGs, like people who were like, there before me, they would basically say that the crash of Bitcoin to $4 was something I would never forget, right? For me, the crash of Bitcoin from $200 to 73, I think is the number that I would never forget, right? Where it just felt like this is the last chance ever to buy Bitcoin below 100, which eventually ended up being true, right? So in hindsight, if this technology is very new, the community. So imagine that Bitcoin is also a community and a movement, right? It's one way to look at the price of Bitcoin is it is the graph of the adoption of the technology, right? And because it's a technology, the graphs look similar to something like a Google or a Facebook, because it's just like the entire world is the playground and everyone can start using this thing. But the way I think somehow it has a cyclic nature where the highs are higher than what you would expect and the lows are lower than you would expect. And I actually don't have good data for like why it happens or would it keep happening, but it has actually happened so many times already that it's almost like not news for people who have been in this industry for a while. But it is a big item for people who are discovering it, or even like have discovered it in the last 2 to 3 years. So the interesting thing that happens is every time a crash happens, it's the time for the industry to build, right? So the Coinbase is a portfolio company of our main investors, Union Square Ventures. I think it's valued now at around $10 billion. And Union Square Ventures did their seed round way back in 2012 or something like that. And Coinbase is imagine if the world keeps moving towards the place that it's heading, Coinbase is a combination of both a Goldman Sachs and a NASDAQ, right? So it is managing money and financial products, but it is also the place where these new types of crypto companies or protocols kind of like go quote unquote public and start trading, right? So Coinbase would actually, during these times of like, where everyone's like crypto is dead or Bitcoin is dead, they would be investing a lot in their infrastructures and all of the work that they need to do, because they have learned by now that it's a cyclic market, and the next time the high is going to be higher than before, and they need to be ready for it, right? So if you look at some of the, I think some of this information is public, where Coinbase would report on the institutional investors who have been onboarding on their Coinbase custody. So our, just a little introduction to what we do. The Stacks cryptocurrency is different from Bitcoin in the sense that Bitcoin is primarily used for payment, but realistically, Bitcoin is becoming more like a store of value and like gold. Like think of that as digital gold, because it is, the fees are expensive and there are some technical scalability things that I wouldn't go into, that instead of being used for everyday payments, it's being used more like a store of value and like gold. Whereas the cryptocurrency that we have started for use on our network is more along the lines of powering applications like Facebook or blogging and photo sharing and all of these things, because these you need to basically pay for transactions for these applications, and our cryptocurrency is more geared toward that. I wouldn't go into more details, but imagine that we had our institutional investors who wanted custody, and they went to Coinbase Custody to basically be able to hold stacks. And Bitcoin obviously has a much bigger market, right? So if you look at some of these institutional players who are now going to players like Coinbase, it's a good indicator of how much institutional interest there is. And the other thing I would point out is that there are other types of kind of like entities that primarily deal with institutions, right? So one of our investors, DCG, they have a separate entity that deals with almost like a private fund that gives people exposure to Bitcoin. So you can actually track like how much institutional capital is coming in, and those people are not directly holding Bitcoin, but they're holding financial products that gives them exposure to Bitcoin. And some of those reports are all also public and a good thing to study if people just want to see where we are in terms of adoption and what might happen in the coming years.
Brilliant. Thanks, Muneeb. So actually you mentioned Stack, which nicely again leads me into my next question, because I want to talk about regulation a little bit, and I bear in mind that there's given the regulatory nature of the environment in the US, you can figure, you sort of say what is appropriate for you to be saying as CEO of Blockstack. But it's more about, why did you go down this route of being the first token which is issued under a fully SEC regulated environment? And secondly, how do you see the regulation evolving in the rest of the world, and in particular the developing world, Pakistan in particular as well, where how do you see the regulation evolving with regards to the cryptocurrencies in general, and the launch of new ICOs and cryptocurrencies like Stack?
Yeah, great question. So I think regulation is a big topic, because imagine that Bitcoin, at least in the US, it's being treated as property for tax purposes. And then I think there are regulations around, obviously, where it is treated as a currency, right? And given the nature of the technology and how complicated it has been a long journey, like even trying to educate regulators and other players in the industry that how to even treat this, right? Or what type of regulations apply. And sometimes there's a clash as well between cultures. Like people who initially got attracted to Bitcoin were all about freedom, and I want to directly own these internet assets, and nobody should be able to like censor this thing and so on. Whereas in reality, a lot of these large crypto companies, they started getting regulated, and they had to do like IRS reporting, and now they have to do KYC for their customers and so on. So I think it's an ongoing tension, but in some ways, like there has been great work by even think tanks. So we are a sponsor of this think tank called Coin Center in DC, and they do a lot of great work in educating the regulators about what should be the right policy in terms of these currencies. I think Bitcoin is a little bit different because it started off in a way where there was no real creator of it. It has this like, very mysterious start. My view is I think it was a group of people. This is too sophisticated a technology for any single person to create. But either by accident or by design, they started the project in a way that there was no company behind it, right? So it just started by this process of mining, where it's like incentives. The protocol is giving people incentives to come and operate the network, and they get paid in Bitcoin, right? So because it started in this way, it was very hard to go and regulate a company, right? Because there was really no company behind it. And so some of the securities regulations that the SEC looks at did not apply that directly to Bitcoin. And the nature of the digital asset was also currency, right? Which usually falls under other regulators. Then what started happening was that people started using the same technology for building other types of networks. It's a little bit like saying that, this is oversimplification, but let's say someone invented databases, and the first use case was that, hey, I can build a digital currency with it, right? The analogy is not perfect because databases, you're, different types of technology, but imagine then somebody else comes along and goes like, hey, it's not only payments or a currency you can build, I can also build a photo sharing app, or I can also build like, this blogging platform or something else, right? It's only limited by the imagination of the developer. So the underlying technology, which is the blockchain technology, I think it's important to understand just the key property of it. The key property is really that no single company is running it, right? So there's this nature of like it being trustless, where even the programs, they're called smart contracts, but what they really are they're verifiable programs, right? So whatever the program does, let's say it's an asset transfer, it takes Bitcoin from Ali's account and sends to my account, it is verifiable. Anyone can verify that that was what the program was supposed to do, and it had the authority to do it because it had the signatures from the right parties to be able to do that. But you can take that abstraction and start doing other interesting things. I think as soon as people start doing those other interesting things and they start raising capital for it, all of these like securities regulations kick in, because what you're doing is you're saying that, hey, I'm going to raise the quote unquote ICOs. They are fundamentally someone saying, hey, give me some capital today with which I'm going to work on some technology and deliver that, and you might, benefit from that in the future, which starts looking like a security, right? Like there are securities regulations that have been around since 1933, and obviously the regulators would start paying attention, which they did, right? So we took the approach where instead of kind of like being on the spectrum of we don't care about regulations and this is just completely new technology and the old regulations don't apply, we were being extremely cautious and extremely careful. And the way we designed, so we raised around 47.5 million in a token offering in 2017, and we just structured it as like more typical Delaware funds with LPs, right? That is something that institutional investors and regulators understand, and we were limiting it only to accredited investors and institutional investors. And we basically followed all of the SEC regulations like out of the gate, right? And then the more trickier part was our public offering, where we went and worked with the regulators, the SEC. There was a long kind of like process of comments from the SEC about coming up with the framework, both a legal framework and an accounting framework and other details for how to do a public offering of a crypto asset in a compliant manner. And that was like big industry news when that happened last year, when we were the first ever qualified project to be able to do that. And I think it's big. It's a little bit like, securities regulations have been around since 1933, and you could only do equities offering using those frameworks. And we are doing an offering of a crypto asset that lives on a decentralized network. There's no kind of like company in which people are buying stuff. And the SEC said you can do it, right? I think it was a huge moment because it's a little bit like, when the first company on Wall Street got listed and so on. And we're still in the middle of it because right now, it's interesting. So there's this place called a Coin Market Cap where a lot of these crypto assets trade. And if you look at the top 100 kind of like projects or currencies there, they range all the way from, pure marketing hype and complete vaporware to projects that have real teams and kind of like are innovating in certain areas. But we are the only project there who both have a live trading ticker. International markets are open for us. We're still working on frameworks for US markets. And we do full SEC reporting, right? So just like a public company, we recently did our 2019 annual report to the SEC, which is, it's like night and day in terms of like how sophisticated like our public filing would be. Like sophisticated investors will look at it and they're like, sure, this looks like an IPO prospectus. And, I can read all the details and the financial statements, even though the difference here is that the financial statements of our company are actually not that relevant for the network, right? And we are working on further frameworks for how basically it starts looking like more of a crypto asset, and instead of trying to fit securities regulations that don't directly apply, even though we are compliant with it.
It's extremely interesting to hear how you're straddling the old and the new capital markets in a way at Blockstack, and it's very fascinating. Now, this brings me to my last question before I'll pass it over to Ali for taking the Q&A session. This is right in your core area of expertise, because it's the technology behind the cryptocurrencies, which is your core area of interest as well as expertise. And the question is that, again, maybe the hype on the technology has also been up and down as the price of Bitcoin went up and down. But can blockchain technology and other relevant technologies, the crypto technologies that are used to build out these tokens, can developing countries in particular use these technologies or develop these technologies to sort of leapfrog a little bit and come into the forefront of both the evolution of this market and also sort of the innovation that it's bringing along? So how do you see this happening, and also sort of views on what should be done to enable this to happen?
Absolutely, I think it's a great question, and it's something that I think a lot about, given my upbringing in Pakistan and this aspiration to try and be helpful to the economy there. And I think the fundamental thing that took me a while to understand was that whenever there is a radical shift in technology or even the world economy, I think it kind of like not only like it resets the bar, and people have a better chance of like starting again and trying to compete in the new world. In some ways, people who didn't do that well in the previous race actually have an advantage, because they're not clinging on to something that was working for them, right? So in some ways, it's actually a little bit like, if you look at deployment of, wireless infrastructure, there are people who just completely skipped the dial-up era and completely just jumped on to the wireless networks faster than the countries who basically had some sort of a dial-up landline working, and it took a while for them to catch on to better wireless infrastructure. And I think over there, the thing is a little bit even more radical, that if you start looking into or tapping into the potential of this technology, you can actually move faster, because you're not being held back by an existing system that works well enough, but will be disrupted by something 5 years from now or 10 years from now, right? And a clear example for that would be, let's say that digital banking is something that is starting off in Pakistan, right? It's kind of like, it is not the case right now that everyone would basically use a mobile app to interact with their bank versus like actually going to the bank. And if you, instead of like trying to build that infrastructure around what we consider legacy banking, you start building that infrastructure around these digital currencies. Like, as I said, they don't have to be volatile. It could be a digital version of a Pakistani rupee, right? Like you could do that on top of our Stacks blockchain and very quickly, or like a digital version of a USD. And it is actually faster, easier, cheaper to build those financial products than it is to try and hook back into the legacy banking infrastructure, right? So you have leapfrogged very quickly, instead of investing a lot in the type of financial products that might exist in the US now, right? So I actually see that as a huge opportunity in terms of like what's possible, and also in terms of government regulations, right? I know that Pakistan has a different stance on these cryptocurrencies right now, but I think, again, I see that as a huge place for innovation, where countries, again, taking the US as an example, Facebook realizes like how important this new technology is, and they started the project Libra, which met with a lot of resistance from the US regulators, like an insane amount of resistance. I think if people in developing countries like Pakistan realize the importance here and actually start backing the technology instead of fighting it, they can, again, leapfrog in this new economy that is being created. And there's a massive opportunity in front of us if we can execute properly.
Brilliant. Thank you very much, Muneeb. And on that very positive note, over to you, Ali.
Thank you. Thank you, Umar, and thank you, Muneeb. This was fascinating. And 2 points which I thought struck strongly with me was, that the possibility for countries like Pakistan for leapfrogging, and especially at this time when they are designing and opening the rules for digitalization, especially in the COVID times, it's best to choose the technology of the future rather than going to a legacy technology. So you mentioned that you support a think tank, and of course in the US with your work with SEC, you have actually pioneered and set the rules for bringing this into the main market. I would, of course, highly recommend you, as I strongly recommend you to work with Pakistani regulator as well. If nothing else, just because of your association for Pakistan. But at the other point, which I thought was interesting, and you mentioned that some of the exchanges have volumes of as high as $10 billion. And before the call, I was talking to Umar, and he mentioned collectively, I think there's $36 billion of trading volume. Just to put that in perspective, Pakistani market has daily volumes of around $30 to $40 million, not billion. So there's a 1000x difference in crypto markets, which are deemed to be more volatile and deemed to be less liquid and deemed to be perhaps more riskier, 1,000 times bigger in size than Pakistani market. So I think that sets the perspective really well. So now we are open for questions. You can type the questions to me. Some people have already done it, and I'll just go through some of the questions. So the first one perhaps might be more suitable for Umar because it's the question, and I'm sure Muneeb, you've also gotten that question many times, is how do you value Bitcoin, and what do you see? What do you think of Bitcoin as an investment product? And I don't know whether, Muneeb, you want to answer that, given your SEC compliant hat. But Umar, I know you trade these in your fund. So how do you value Bitcoin for your fund?
Sure. I think I'll start with one of the things that Muneeb said, that the Bitcoin is a reflection of the adoption of the technology. Now that's a very sort of vague and broad brush statement. But what that means is that we could see exponential growth in the price of Bitcoin for a long time to come. However, what that also means is that there are going to be a number of points where it will retrace and will probably come off a lot, and then start off again. The best sort of analogy to Bitcoin is still in the real world is still gold. And the reason for that is that, while it was initially meant to be money, it has a lot more become a store of value. And it's really the stark sort of contrast of the Bitcoin supply, which is capped at the 21 million Bitcoin mark, versus the real money supply, which you think should be capped, but as we've recently seen, the Federal Reserve adding $6 trillion magically to the system. I'm not in any way saying that it's not a good idea to be supporting the markets right now, but it's quite important to see that there is large-scale asset price inflation that happens on the back of this kind of injection of liquidity, and we've seen that between 2008, where the sort of S&P 500 bottomed at, was it the 666 number, and then rallied all the way to 3,400 from there, going 5 or 6 times in value. So it's in those 10 years that we saw the American stock market, going 6 times in value. So it's quite important to see that one of the big sort of drivers of valuation of Bitcoin is the fact that it's a store of value. It's a scarce number. It's something that people have enough of that now there's a base value established, just like gold, where there isn't a direct utility of the commodity, but it's the fact that enough people hold it, that it is used as a store of value, and potentially sometimes in large chunks as an exchange of value too. So I think that's my view on how Bitcoin is operating. It's anti-inflationary asset like gold, and it's here to stay given how widely owned it is now.
Muneeb, before you attempt, Muneeb, sorry, I'll interrupt and add another thing to your question list. How do you see China, this move in China, moving towards digital currency? How do you see that also impacting the whole cryptocurrency ecosystem and the valuations?
Yep. So let me pack in a couple of comments here, right? So one was about this earlier discussion about Pakistan and what's possible. And I think we have to keep in mind that countries where the general population is used to seeing their local currencies becoming worthless over time, and they're always looking to keep their savings in USD or some other more stable currency, are actually better markets for the adoption of Bitcoin because they already have the mental models in place. They know that, you know, my rupee might be worth less 5 years from now, so I'd rather keep my savings in USD or gold or something else, right? Which is the same thing with Bitcoin, right? I completely agree with Umar that it's a simple mental model here is think of it as gold and scarce and something that might be more that might help you protect against kind of like inflation of your local currency, which a lot of people might be used to. The second point is when we talk about Bitcoin as being a technology and the graph kind of like being a adoption of the technology graph, it is in some ways like more real than we think, right? Because some of the work that we are doing, and again, you know, Ali, obviously I can't make comments about stacks and there are lots of regulations here. I can actually freely talk about Bitcoin because it is a freely tradable asset and we cannot move the price on Bitcoin in any way. And so for Bitcoin, we actually, even with stacks, use Bitcoin, right? So without going into technical details, we anchor to Bitcoin security and in some ways like have a very healthy correlation with Bitcoin. And if you model Bitcoin as a little bit like, you know, the internet of the future, where some event only took place on the internet if it got eventually settled on Bitcoin, right? And that event might be thousands of payment transactions that got settled on Bitcoin, or it might be, you know, a lot of apps. There was a lot of like state transitions in those apps that eventually got settled on Bitcoin, right? So the Bitcoin becomes in a little bit like the base layer for the internet in many ways. And I know like it's a very far stretch from where we are, but those are the types of models of technology adoption that we're looking at. Just like, you know, on the internet, you're sending packets everywhere. Now imagine that there's a layer that is the layer for the source of truth, that did something happen or did something not happen, and that layer is Bitcoin. And it can be payments, but it can be other things as well. And we're already seeing the world move in that direction.
Thank you. You mentioned payments, so that nicely ties into a couple of questions which we have gotten, and I'm just combining them. One of the application area for cryptocurrencies has been inter-country money transfer. So do you think that's a good application of cryptocurrencies, and do you think that can replace SWIFT, which is currently used for that purpose as a messaging system?
Yeah, I think in terms of technology, it's like far superior, right? Like it is, even if, you know, you would just try to redesign some of these networks, you would end up with way better things than Swift. Like it's such an old clunky technology that in my mind, like there's no reason to believe that the new protocols like these USDT Tether type stable coins are way better. The interesting thing there is like there are projects out there. One is called Celo, CELO, who are looking at this exact problem from a complete end-to-end design, right? Like they're starting with the UX of the user, that imagining that, you know, the user just has a mobile device. The user doesn't even have a bank account, right? All the way to the characteristics of the underlying stable currency that will be needed for such transfers, right? So it's a little bit like people are innovating in this exact area in a complete end-to-end manner, that what should the user experience look like? What are the details for even people storing their money, not in a traditional bank, all the way to what should be the underlying currency and how stable it is for such transfers to happen. I think it's a little bit like the future is already here. It's just not widely distributed yet.
Great. Another question, and again, I'm combining a few questions together to make it more thematic. What's your opinion on stable coins backed either by other currencies or backed by gold? Do you think they are superior than those who are not? And secondly, I know that you work with a lot of institutional investors from Japan to the US, and I'm sure you work closely with governments, at least in the developed countries. What is their thinking on stable coins?
Yeah, so I think in my view, we will see a lot more innovation in different types of currencies, right? Like I think stable coins, like on the spectrum of things, stable coins are some of the most obvious, simple things that you can do because you're just pegging the value to an already existing currency. Facebook Libra, for example, was trying to do something super interesting where they were trying to create a basket of assets and basically trying to peg the value of their currency to the basket, whereas the basket itself was stable enough that they would not have been a lot of volatility. But due to regulations and pushback from regulators, they're now trying to go back to, we'll just peg it to $1 or euro or something else. But I think if they can't do it because Facebook is too big and a threat, it is a white space for startups to come in and try to innovate over there. But in general, I sometimes I think I like to think of stable coins or currencies like Bitcoin or Stacks as almost like being in different categories. They actually don't compete with each other, right? Whereas the characteristics of a stable coin is very different from something which is a base layer store of value like Bitcoin to something that is primarily used to power internet applications, right? Like you might compete with other types of quote unquote currencies. And I'm using quote unquote because they're really not even currencies. Like it really depends on what you're trying to do with them in your own category. But some of it, like this is still so early in this space that most of the projects that you're seeing, they operate in their own categories and there are very few competitors within their own categories right now.
Great. There's a technical question, but which is that, isn't Bitcoin constrained by the block size? And will the size increase? But before I go into that, there's one question which is coming in my mind, and it's more of a personal question, but I think it will help us put things in perspective. And it's for Umar. And then there's a personal question to you, Muneeb. But Umar, you, of course, had a career in mainstream finance, Goldman Sachs, Citigroup, SocGen, Lehman Brothers. Why? Well, which is totally mainstream. While Bitcoin is still considered for most people in the mainstream, especially the audience over here in Pakistan, for people in Pakistan, Bitcoin is something which is totally outside of this domain of formal financial markets. Why did you, a person from the formal financial market, think about trading cryptocurrencies? Because I think I would like to hear your thought process because, a priori, we think this is something which is totally something which is very technical.
Sure. So I think from the, I'll just go over a number of things here, but just on the Bitcoin side first, there were early adopters back in, the 2011, 12, 13, that kind of time. And Muneeb mentioned Coinbase, which was started by a currency trader, a junior currency trader in New York in Goldman Sachs, Fred Ursum, who, as I was trading foreign exchange options, didn't like the foreign exchange spot trading and instead decided to go a maverick route into this. So there were those guys who early on built something in the cryptocurrency space. There were other people who were young traders in banks who thought this was an interesting space to be in very early on. And then there's the growth of the general growth of the area. It's gone through a number of cycles till it starts looking a lot more, though it still is miles different, but it starts looking a lot more like a financial asset. So back in 2011, it looked like a lottery ticket. But in 2017, 18, 19, it looks like an extremely volatile emerging market currency, for example. It's beyond the normal volatility, but still, so it starts becoming like a financial market from the market's perspective. Now, from my personal journey, so I was trading foreign exchange derivatives for bulk of my career, both market making and proprietary trading, and then over the last couple of years, started in the space of quantitative trading. Again, straddling both the traditional markets and the cryptocurrencies, building out very technology-enabled business. So myself and my two partners, Shamil Malik and Adam Carlyle, we got together about 2 years ago and thought of this firm that's going to trade assets across the spectrum in a very, very automated, fully systematic fashion where it's all about the quantitative modeling of the markets. So when we think of things like that, cryptocurrencies are probably right now the best kind of asset to trade in that format. And the reason is to do with the openness of the market. So the exchanges across the globe, so in particular the derivative exchanges now in the cryptocurrency space. So just on Bitcoin futures, as you mentioned earlier, there is $30 billion of volume going through on a daily basis, just on Bitcoin futures. And then there's now upcoming volumes in the option space and in altcoins and other futures and so on and so forth. So the ecosystem is building where the exchanges, well, for example, to have a CME exchange access, or for that matter, a PSX access, you need a seat on the exchange, you need to be connected, you will get data, it will be costly to do all those things. Whereas with cryptocurrencies, all you need to do is have the ability to code properly, and you can connect to any exchange in the world. You will get live order book data, you'll get live trading information coming through to you. And it's not trivial, because building out those technologies, and particularly to tons of disconnected exchanges, is actually quite a painful thing to do. But if you are able to do it, it's the richest source of data available in financial markets. So if you're going to model financial markets in a quantitative fashion, it's one of the best places to be doing that. And that's what really attracted us, the trio, to build out a firm which will be focused on cryptocurrencies asset management. And again, the two are also still quite different, because cryptocurrencies are inherently still young and not necessarily as trustworthy, whereas asset management is a very trust enabled business, where it's very heavy on regulation and all that. So to bring them together requires experience in both worlds again. And into something like the Stacks issue of SEC regulated token, it's exactly that kind of thing, where you can build out a hedge fund, which is an entirely regulated activity. And with that, what you're trading is a young nascent asset. And in particular, in our case, for example, we concentrate a lot more on futures within the cryptocurrency space. So also what interests, at least initially, and then more and more as we get pulled in, there is a lot more of valuation of the Bitcoin itself. But in the beginning, and even now, the thing that really interests us is the ability to trade this asset in an uncorrelated fashion to the underlying market. So we as a firm would trade, for example, largely the volatility of the asset as opposed to the direction of the asset, which is quite interesting, because it's an asset which has volatility north of 80-90% regularly, whereas the average VIX levels, barring the COVID episode, are sub 10 even on a realized basis. So it's those kind of things that have brought us into it. And now you can see names like Paul Tudor Jones of Tudor Associates, and then people like Jim Simons from the Rentex Medallion Fund have shown significant interest going into this asset class, because it's something that has become extremely attractive as an uncorrelated source of alpha to their large portfolios.
Thank you. That's wonderful. And exactly with that, I'll jump with Muneeb. Muneeb, one thing, and then of course you have done a milestone by getting a regulated, approved offering. But other thing which you've also done is that the kind of investors you have been able to attract to your platform are some of traditional investors, which one will not expect to take the kind of risks which one thought are in this currency. So for example, you have Harvard endowment, old school, long-term, it's an endowment. What's the kind of thing which is, and what attracted them towards Blockstack? Because I would love to think that, I would love to know how are old school investors thinking about cryptocurrency.
Yeah, so I think I just want to say a quick line about, I see Brad, who's an active Blockstack community member, asking about Bitcoin blockchain scalability. I think in general, we will just use that as a settlement layer versus actually trying to do meaningful transactions. And Brad, I'll follow up with you. And about your question, I think in general, like like, some of our institutional investors, we don't publicly comment about them, but there are the SEC filings and people can find all the details there. But in general, what happened was a little bit of a just a case of like being early and being one of the few teams that basically had the know-how and the technical depth required. Like it's like, uh, sometimes, like, so I know people who backed Coinbase like early on, and they would joke about, we backed them because they were the only team that would come across as professional and sophisticated and in trying to do the same thing that 5 other teams would be trying to do, but you would never give your money to the other 5 teams, right? Like, crypto is also a little bit of a wild west area, especially in the beginnings, becoming more sophisticated now, right? I think for us, timing was very interesting. For some of those like more sophisticated investors in 2017, the concept of crypto funds was just beginning to emerge, right? So there weren't even fund managers, at least not a lot of them, right? Where these institutional investors would just give them the money and let them manage it, right? And we were doing our offerings, so we were talking to some of these more sophisticated investors directly. And actually, I've done this work like for a couple of years in a row, where Union Square Ventures would basically invite me and a couple of other portfolio companies like Coinbase and others to come and try to educate their LPs, right? So some of the investors like Union Square Ventures or Andreessen Horowitz, they've done a lot of work to even educate the LPs and other people. So we were in that phase where the LPs were traditionally, who would be LPs, were getting educated by projects like us, and they had an opportunity to directly get exposure in the project. I do think that has changed a little bit, because now there are much more sophisticated funds where, I think a little bit of a consensus that emerged in Silicon Valley, which is very interesting to see, is that in some ways the traditional top venture funds kind of admitted that we actually aren't very good at crypto investments, right? And they started specialized funds, right? So they would name a top firm. Andreessen is different, where yes, there's a Andreessen Horowitz crypto fund that is very well integrated with the main fund, but other funds would basically have some sort of a stake in a specialized crypto fund. So they would direct all of their LPs to go and talk to sometimes a young manager who actually knows this space well. So I think most of the I might be wrong. There might still be opportunities for direct institutional capital going into projects, but I do think that now that typical layer of indirection of LPs into funds and then funds into investments is there now.
Great. So there's a question that what is the key challenge for banks to use blockchain as a payment network? And then I can perhaps add some color, because when I was at SafeCharge, SafeCharge was a London-listed company, one of the largest payment processors in the world. So when you buy tickets on Thai Airways, the payment processor is SafeCharge. So when we looked at Bitcoin, and this was early on, so pre-2017, it was very volatile, and also integrating that with their existing systems was difficult. And I suppose that's the challenge for incumbent financial institutions, that how to integrate a new system with their legacy infrastructure. And Muneeb, would love to have your comment on that as well, that, how, I'm sure when you deal with, you must come across this issue of dealing with combining legacy infrastructure with new technology. And Umar, I'm sure you also come across that. So we'd love a short comment on that. And then we'll have time for one final question.
Yeah, so I think in our case, like we try to deal with this more at the intersection of, like, yes, there's technical complexity, but we are usually worried more about how do we hide that technical complexity, right? Like it's I think one of the really big challenges with the crypto industry is that it is very intellectually fascinating, and there are so many different things going on, not just for computer scientists, right? Like for people who have a background in game theory or economics or trading and so on, governance and politics. But I think sometimes, like, a lot of the raw complexity involved in these things gets exposed to even like developers, engineers, or the end users, right? So when we approach these things, I think we're less concerned about solving the technical challenge that can be done with the right set of people and time and resources. I think where it gets really tricky is how to actually hide that complexity, so nobody really even sees it.
That's very interesting. I'll make a point about that. But Umar, before that, would love to have your comments because
I was just going to comment. I was just going to comment on the financial market and trading side of these cryptocurrencies and the technology that is involved there. And we see that actually from that perspective, I think there is a link both ways, where the newly developed technologies on the trading side of cryptocurrencies also have a lot to learn from stuff that, the mistakes that were made over the last 20 years in the traditional financial markets, and electronic market making, algo trading, high frequency trading, all of the things that were have developed and evolved in the regular markets have a lot to actually give to the development of the infrastructure from a trading perspective on the cryptocurrencies side too. So there is, while as you say, there is this ability to start afresh, because what Muneeb pointed out too, that sometimes it's much easier for places to develop when there isn't actually anything to that's working. However, in this case, there's a lot to take from the old world into the new world too, which is what we do on the market technology side of things. So we have done a lot of work developing trading infrastructure and trading technology, and that's because a lot of what the traditional financial markets do is actually quite good as well. And so it's not sort of stuff that you should throw out of the window. Just like, SEC regulation is quite a good thing to straddle the two worlds. It's also, from a technology perspective, you should always, I think in this space, take a lot from what is already there.
That's very wise. And when Muneeb was mentioning that his task is to hide the complexity for other users, and I think that's very apt, because I think what has happened is that a lot of the noise for the users has been about the technology, and that makes us scared. And it takes me back to our days at LUMS, when we were doing computer science. I would use the fancy operating systems and the easy GUIs and UI UX, while Muneeb would use Linux without the aid of any application to hide the complexity. So I suppose it's very similar, that you guys need to make the application to make it simpler for people like us to use and apply that. But it's very wise, Umar, that it needs to be a combination of both. And there might be some application. You have to make the technology easy to use and compliant for a regular person to use, especially in the financial markets. The final question, and I know it's late night in Pakistan. How do you think COVID impacts the cryptocurrency world? Both in terms of its impact on the US dollar, and I know, Omar, you have alluded to that earlier, but it would be great if you can also sum it in the end. So Muneeb, how do you think COVID impacts the technology? And Omar, how do you think it impacts from an investment perspective?
From my side, I think it's very interesting. So one thing that's happening is that it's bringing some of the fundamental properties of sovereign currencies like Bitcoin that are not dependent on a government into everyone's minds, right? Like as Umar was pointing out, that people can now see that here's a currency where I'm highly dependent on the decisions of the government behind it, versus an asset class that is actually rare and is sovereign and is not dependent on any company. So I think there is an acceleration a little bit that's happening, where the divide is more stark because we are in troubled times, versus people weren't actively looking for other assets during peace times, right? So I think that's one thing. On the more kind of like these decentralized apps or user-owned applications versus the Facebook and Googles of the world, it's also very interesting, because over there again there's a lot of pressure to come up with contact tracing applications or other types of measures to try and contain the virus or help open up the economy again. And over there, the tension is that that is going to make the big tech companies even more powerful, because that's an excuse to get further surveillance baked into our everyday apps and give more data to the government and the big tech companies. So there's a little bit of a resistance there as well. So I think in general, the theme that I'm seeing is a sharper contrast between the two worlds, both on the wealth creation and storage, and on how do we use the internet and who owns our information and data.
Thank you, Umar.
And I think from my side, just, I'd elaborate a bit more on that store of value point. When last time there was a massive fiscal and monetary stimulus back in 2008 into the system, and the Fed balance sheet in particular, as an example, I mean, similar to other central banks, went from sort of under $1 billion, under $1 trillion to over $4 trillion. And then Fed governor had actually said that we're going to unwind the stimulus. So the market took it as a temporary thing, and took 10 years before in 2019, the first time there was a little bit of reduction of this balance sheet. And that wasn't by unwinding, but it was just allowing all the bonds that were rolling off, they weren't actually replacing them. So that bit happened, and we were still around the 4 trillion mark, and all of a sudden COVID has happened, and we've put another 6 trillion on top. It is absolutely clear in people's mind this time round that this is a balance sheet size which is just going to stay there, and the only sort of way out of this is just inflating this debt away for the government. So or which means devaluing the currency effectively in the long run. So I think when people think about what to invest in, they're looking for something that's not going to, at this point, it's almost like a defense play, where you're looking for something that's not going to lose its value. And when you look around, bonds, sovereign bonds, for example, are essentially a promise to deliver the sovereign currency. And if you think the sovereign currency is going to devalue, there's no point holding US treasuries, because it's going to give you your $100 back, but they're going to be worth less. And then in this context, when you look at the stock rally in the developed markets, it kind of becomes clear what is going on. It's almost like the stocks have become the new bonds. This is the thing that people are buying in distress, because they realize that a bond is worth nothing if the underlying currency is devaluing or is worth nothing. So hence you go to stocks. And in this context, and then the problem with the stocks is that there's the underlying economy, and there's a big gap opening up between the two. And question is, can central banks hold this gap for long enough till the gap actually closes? Because if they can't, the stocks will actually fall down to where the gap is. So when you think about what asset to hold, there are not many assets in the world that you'd like to hold. And I think that's where the Bitcoin in particular, and also other cryptocurrencies, start showing up as stores of value, because you realize that there's something that might hold their value over the next 3 years, whereas the rest of the world will devalue a lot. So I think in that context, it's something that's been brought to people's mind clearly. All the way from people like Ray Dalio to Paul Tudor Jones are saying exactly the same thing, and they're saying it very openly, where they think that the fiat currencies could devalue a lot on the back of what has happened over the COVID crisis, and you are much better off holding something like Bitcoin that is much more likely to hold its value.
Thank you, Umar. Thank you, Muneeb. This was extremely insightful. And it's in line with the kind of discussions we've had over the past 2 months. So since the lockdown happened, we at KASB Securities, we have done 8 seminars where we have tried to provide a global exposure to investors in Pakistan in a cause to drive financial inclusion and improve investor education in Pakistan. And I think the last point which you said is very relevant, that there is a search there for uncorrelated assets. And I wrote about it in my previous last report, which I published for KASB. This video will be available on KASB's website, which is kasb.blog. You can also follow that for news and economic updates and for our research. You can also download KASB's app, which is ktrade.pk. It's an app which allows you to invest in stocks listed in Pakistan, as well as look at share prices, make portfolios. And these videos will also be available on our LinkedIn and Facebook pages. Muneeb and Omar, it was a delight talking to you and reconnecting with both of you. As you said, we go a long way back, and it's always a pleasure. Both of you are PhDs. I forgot that in your introductions. Omar is a PhD in physics, computational maths, and Muneeb is a PhD from Princeton in computer science. So thank you for your time, and have a good evening, and Eid Mubarak in advance for people in Pakistan and also for us. Thank you.
Thank you.
Thanks for having me, Ali. Great to see you, Omar.
Pleasure.
Great to see you. Thanks. Allah Hafiz.